World markets sell off. Greece will have to wait until mid-November to get its next chunk of bailout money as investors worry about a larger than expected haircut for bondholders or a possible default. Panic spreads to the U.S. with the S&P nearing bear market territory after hitting a new low for the year. The one bright spot, though, could be Apple as it unveils the new iPhone 5, but can it wow investors? I'm Alex Steele, and the morning call starts right now.
Good morning, Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, fourth quarter starts off with a real thud here. S&P close to bear market territory, hitting new lows for the year. We also saw a note out this morning that Goldman Sachs cutting its global growth forecast. Chance of a recession now in the U.S. is 40%. How low are we going here? What's the downtrend?
Well, first of all, everyone's not telling us anything that we haven't known. And yesterday we talked about, you had all the statisticians out saying how the fourth quarter is always much better, especially after 11 to 12% down third quarter, this and that. The bottom line is we could go higher, but I was like, where are we going to go higher from? Where's that pivot low going to be? Let's watch the levels, because everyone talking is all a bunch of noise. You know, the stock action is what tells you what's going on. And yesterday they tried to defend 1120 with new money coming in for the fourth quarter. It broke. We closed below 1101, and we're starting to hit those levels we spoke about yesterday. We're almost at 1070, and that's first minor support. So let's take a quick look at these charts right here.
Yep, and then while you're showing it too, I should also say that we spoke before about Chief Technical Strategist Mark Arbiter at the S&P said 1020, 1050 could be a low this year as well. It
could be. Well, now we're in motion.
Right.
Okay, here is your high, a lower high, another lower high. The most recent one showing you that demand wasn't even coming back. You know, we first had that move down to 1120 that held. Then we retested this small ascending trend line, and it failed there. That gave you the clues. You know, the nails in the coffin, and then obviously yesterday we broke 1120. We closed below the low of the year, and now according to Mark Arbiter, or whatever the guy's name is, I'm sorry.
Mark Arbiter, and this was a few months ago he forecasted that 1020, 1050 low when we were well above those levels, so it was a pretty bold call. It looks like they could get it.
Yes, well, it's on the way, and take a look at this chart. We are now below this support level, below an area which was the last line of defense. So now you do have a small little area around 1070, and then major support at this low of last summer around 1010. Right here you have about 1040. So 1010 to 1040 is the next big area that you should be looking to try and get some macro longs, or at least test the area to see if it could stick.
Now, fundamentally, though, what has really changed in the market? I mean, we understand that Greece is going to get more money now till November, but they have enough cash to tide itself over. We understand the Eurozone's in trouble. I have to wonder if it's really a weaker dollar that is really continuing to just pound commodities and pound stocks.
No, well, right now it's a stronger dollar.
A stronger dollar, weaker euro. That's just pounding stocks and commodities.
Well, that trade is unraveling. Okay, It used to be weak dollar, buy the markets, buy commodities. And lately, all the fundamentalists out there were saying we're going to have 100 in earnings next year. Now they're taking it down to like 85. So fundamentals at times like this, just doesn't matter. It's the price action. And right now, this lower end of the range is now resolved to the downside. So anyone trying to get long in that 1120 to 1200 area is now like, uh-oh, what do I do? So that adds to the movement to the downside. And if you're not short, and if you're stuck in your longs, you better be prepared. That 1010 to 1040 is the area. Watch that, and hopefully that'll be the low of this year, so then we can get a fourth quarter rally like all the statisticians say.
Real quick, any chance for a light bounce before we head lower here, or is it just really big downtrend right now?
Well, my strategy is like this. Last week we talked about getting short last Wednesday. When high beta went negative, when the Dow was up 250, that's when I put on my puts. That's when I bought the October 112s, 111, 109s. We talked about it. That's when I got short the spiders. You've been able to look at it on the virtual trading floor. Into this down move today, I am covering. Get that? Covering my shorts. I'm probably going to be flat the spiders, and I'm going to sell at least 3/4 of my puts to book it, because I'd rather be early to cover so I'm in free mind to buy if we really accelerate and we get down to that area. I don't need to make the meat of the move. We were at 1155. We're below 1080. That's 70 handles you could have made short in less than a week. So don't be a piggy. You take that profit, and then you get ready to maneuver the other way if it develops.
All right, well, let's go to one stock that actually might have some mojo today, and that's going to be Apple unveiling its iPhone 5 at its conference later today. That's 1 p.m. Eastern. Okay, so typically buy the rumor, sell the news. We're not seeing that. We're seeing sell the rumor. So you want to buy the news is my question.
It could be that, because we're very oversold. Recently, Apple has not acted well. We've been, ever since that JPM note about the iPad with 25% less in orders, blah, 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 it's been acting weak. So it's been more of a sell than a buy. And if you look at the chart here, you will see that a lot of the technical damage has been adding up. First, it couldn't hold this 400. Then this was your stop. We talked about it many times, 395. This was get out of your momentum shares, get back to tier 1 if you have to hold it. And now we're coming down to this, what it was yesterday's low, I believe, was around 373. So today, short term, I'm going to look if I could buy it long versus 373. If 373 breaks before the 1 o'clock announcement, I think the 100-day holds around 364.
So would you short down to 364 maybe?
No. Okay, I think the juice is out on the short side. You've already made your money. A lot of guys have been shorting in my office. I've tried it a few times myself. Now's the time to look for a long, but you have to do it still with a plan. You can't just buy Apple because it's Apple and they have a product announcement. So at this point, it's more strategic to try and buy into this area versus sell, but technically it's a lot weaker than it was a few weeks back.
And also there are worries, of course, the iPhone won't really wow investors. Tim Cook is up to the bat, his first time since Steve Jobs resigned. We also have perhaps voice recognition, but big whoop, Google has it. So those are things to factor in that maybe we won't get that kind of bounce that we're expecting. So let's go to Google, actually, in terms of a competitor, because you might see some good derivative plays right now. Google has been broken down, but it does have one of the main competitors, the Android OS, to Apple.
Well, for cash flow traders, my price point sheet 514 was you're short or get out of the way of Google because that was an ascending channel that broke to the downside. Let me show you on the chart. Google right here, this was the area. You had your shooting star top, technical signal, lower high. This was your area to get out of the way. Around 520 yesterday, we listed as a short of 514. Now it's down to 495. I think, for those looking to buy the dip, perhaps you could buy it into 480. But again, this stock has just been frustrating for long-term bulls. It's been frustrating for traders because it's so sloppy. But lately, it's been a better short than a long. So perhaps if this group bounces or if the market bounces, look at that. Look at yesterday's low and then look at 480 for Google.
And is it the same strategy with Research in Motion hitting yearly lows, or is it just a avoid or short?
We've been talking about how RIMM's going to be a teenager, okay, and that was when it was like 25 to 28. And at this point, it's a little bit above 20. I don't think you could short it here because it's been just too battered and bruised. And anytime there's some takeover rumors, it bounces. I would say if it breaks 20 and starts to accelerate down to 18, maybe you start buying it. You could be safe because those rumors will come back and you'll get it as a trade. But RIMM is really not an investment. And
let's look at the telecom providers. Of course, the iPhone goes to Verizon and AT&T. Both have juicy dividends, 4.5 to 5%. Sorry, 5.5 to 6%. And then Sprint also got really hammered yesterday, and that's because the iPhone is probably going to go to Sprint, but they're paying up for it, like $20 billion to buy over 30 million iPhones over the next 4 years. So are these good possible trades today?
Well, Verizon, I just looked at the chart. I haven't been looking at it. People are talking about investors want dividend, and this chart actually looks decent. If you take a look here, it's holding above the moving averages. I just showed you a lot of stocks have been crushed. So if you want to be long some Verizon, I think it's okay if it starts breaking below, just say 35.60. It could have a move down to 34.60, but overall, Verizon looks good. AT&T also doesn't look as good as Verizon, but it's still holding the lower end of the range while the markets are breaking through it. So it's showing you that some people are trying to hide in these two stocks. So if you had to be long something, these two stocks are showing better relative strength.
All right, fair enough. And we will be right back with more ways to profit off of more downtrend in the markets and more quick ways to make some cash. Stay with us.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
All right, welcome back. We're in the trenches here with some reverse ETFs. Scott, when we were planning for the show yesterday, I was like, is there anything in the green that we can talk about? And you said, how about reverse ETFs is the best way to make money right now?
Well, about 3 weeks ago when the market was breaking down, we went over these. I wanted to show you some vehicles that you could actually be long if the market goes down. And I understand, you're not supposed to make money when everyone's upset, but you know what? And it's un-American to short the market. But if you're going to be in the market and you know how to play it, you can make money from the short side because half the time it can go long, half the time it goes short. So you have to know what your vehicles are. So the SDS is short the S&P. And just like the S&P is breaking down, you take a look here, you'll see that this is breaking higher.
So in terms of this versus shorting the S&P, this just gives you more juice.
Yes, a little bit more bang for the buck, which we like percentage-wise. So here was that range, just like the S&P was breaking before it broke lower. S&P broke lower, this broke higher. You know, some guys were in tier 1, added yesterday on the break, and now we're opening up. I would sell some, just like you taking profits if you're short, into the highs here of 28, but hold some if we go lower. This has been a good vehicle if you wanted to short the spiders and you couldn't get a borrow, you could buy the SDSs.
What about the QID? It's sort of the reverse of the Qs, but that could be risky today, do you think, because Apple's iPhone announcement?
Yes, the NASDAQ has been holding up better, and yes, it's been playing some catch up to the downside. I would stay away from the QIDs just because if something bounces, the Qs and NASDAQ should bounce first, and that'll be the first to go down.
What about the FAZ? It's the reverse of the financials. Might be a good bet, especially we're seeing European banks need to be bailed out, a la Belgian bank Dexia. You know, Deutsche Bank announcing Q3 results to be well below expectations. I feel like this is going to get a lot of juice today.
This has been, and this has been an outperformer if you wanted to be long the reverse ETF, because the banks have been the headwind. The banks have been the problem. Every time you've had 2-3 days up in the banks, it's been sold. So if you look here at the SKF, you have a healthy breakout here. You know, your first long was down here around 66, big move up to 90. It's been consolidating here. If you were in tier 1 and added here, you got paid nicely yesterday. Now it's probably opening above 95. I would sell some, but hold some because the banks are still a problem spot. And FAZ is the same type of scenario, but it's a little cheaper. So, you know, some people feel a little bit more comfortable, but it's on the same path.
All right, let's go to TWM, reverse of the Russell. So small caps kind of get extra hammered, right?
Yeah, because that's where the growth has been.
Right.
And just like when you're in a healthy market, when the Russell is making new highs first, lately the Russell and the mid caps have been under severe pressure. So this ETF has been paying you a lot of bang for the buck, so to speak. So if you take a look here, you will see that it also, you know, is at new highs. You know, broke above 60 yesterday. Same type of pattern. Buy number 1 was when it cleared this 46 and then retested it after a big move, and now it's on its way. So it shows you that if you just like being long things, you could be long these and actually be short the market. But at this point, the market's very oversold. The oscillator is like minus 51, probably opening at minus 60. Cover some shorts, take some gains, and let's get ready and flexible just in case we get some kind of bounce coming up soon.
Ready and flexible. Let's go to the quick ways we're going to be flexible. Let's start with where are we going first? Las Vegas stands. Now, Macau gaming revenue growth was up about almost 39% year on year in September, but sequentially it's falling, down about 20% from July. So I wonder how that's going to filter into the stock.
Well, the stock has been crushed. We've seen 3 different technical factors that gave us clues. That push-through failure, I got to show you the chart. I know these are quick hits, but this was that push-through failure. Went through 50, failed. You get out of some stock. This is when this ascending channel broke to the downside. Last line of defense was 44. Now it's down at major support of 36. You have to be cute and try and play it long. Play it versus 36, and maybe we get a little bit of an oversold bounce to 40, but this area has been some trouble. Any
more room to short, or is that trade totally out?
I wouldn't short it down here at 36, 37.
All right, let's go to Bank of America, down 6% yesterday. You know, it's trading below $6. It's nuts. What do you want to do with this stock?
Just avoid and just watch. If it goes lower, psychologically, the market's going to have a hard time getting any footing. If the banks start to bounce, maybe you go for some of the better performing stocks. And if you had to be long any banks, I guess JP Morgan is the one, but I don't even know if that's going to work.
Yeah, big if. All right, let's go to JetBlue, hitting a new 52-week low on Monday. Is there room to short? This was, of course, some rumors that American Airlines would go bankrupt.
Yeah, that was a nutty move. Yeah. You know, this is that's why there's a lot of fear out there. You have American Airlines talking about potential bankruptcy. It shows you structurally how poor the pension system is run. I don't want to get into that, but AMR was a disaster yesterday. You know, it was weak as it is, below all the moving averages, so someone knew something, but it broke major support. And even a good company like JetBlue that has movies you can watch and those nice blue chips, you know, it broke key support at $4. So it's showing you that there's not a lot of places to hide, and this is a dangerous market, and I hate airlines as it is.
All right, fair enough. And Amazon has been a leader, but again, down almost 2% on Monday. What's your strategy?
Amazon, we talked about playing catch up to Apple. You know, that why wouldn't it hit its 50-day when Apple was 10 points below it, so it was a good short for some. Now it's a little bit choppy. It's coming into big support. I would look to see if there's any leadership here. You know, it's at its 50-day. You know, I guess this is an area of big support around 205. At this point, you know, you missed your short, you missed getting out of your long. I would look to see if it holds around 205. All
right, let's go to oil really, really fast. We have WTI nearing 75. We have Brent under 100. Is there an OIH trade here?
OIH is at the dead lows. I would not be shorted. I guess look for some type of red dog reversal 80-20 trade. If it breaks through yesterday's lows, come back up. You could do it for a cutie type of long, but make sure you use today's low as an out because having stops has been key in this market.
And of course, the ones that actually is in the green is going to be gold and silver, getting some kind of bounce, you know, up $10, $13, but we're not seeing these volatile $70, $80 swings anymore. So how would you be positioning yourself? The calm.
The calm. At this point, it broke hard. It's trying to grope for support. GLD right now is holding above, this 155 area. You would have thought it could have bounced better. Maybe needs a little bit more time to get some momentum.
Well, with a strong dollar, you got to be patient, I think.
Yeah, it's hard. So it's hard to be anywhere. At this particular point, here's that lower area. I guess if GLD start to break above 162 and hold, you can get a move to this moving average around 166. But if we start getting back below 159, chances are this lower end may not hold.
All right, that's it for us for today. It was like a cheery, a cheery morning call wrap up, right? And you can catch Scott on Street Science today, CNBC 2:30, for more of his great stock picks and how he's going to be trading this crazy day. And I'm Alex Steele from the Street.
And I'm Scott Redler. Make sure to follow us on the virtual trade floor. Follow us on the chat. We're really trying to add value as the day goes by. You have lots of headlines to deal with, lots of action to uncover. So if you want to be safe and prudent, make sure go that extra yard. And if not, I'll see you at the recap. Have a great day.